Hello, everyone. Welcome back. We've reached one of my, I guess, favorite panels, the FinTech investment trends. And I'm very happy to host with us today this really phenomenal panel that we have. So we'll start with maybe a round of introductions. We have, of course, ladies first. So Irit, if you may, please introduce yourself.
Sure, absolutely. So hi, everyone. My name is Irit Kahan. I'm a partner at DTCP, focusing on growth stage investments across enterprise software, B2B, cross verticals. We are a global fund, have an office in San Francisco, Germany, and here in Israel, and a small office in Korea. And I'm focusing on all the Israel-related investments. Great to be here. Looking forward to the panel.
Perfect. Jonas? Oh no, we can't hear you, Jonas. I think maybe try to disconnect your earpiece. Not yet. So while you do that, Leon, please.
Sure. Let's just double check. You can hear me, right?
Yes. Yes.
All right, great. So Leon Saunders Calvert, I work for a company called Refinitiv. Refinitiv is a global, very large market data provider servicing the financial community, and is now owned by the London Stock Exchange Group, which is of course one of the largest financial infrastructure providers in the world. I run the research and portfolio management business at Refinitiv, which is an easy way of saying that is if institutional asset managers buy desktop products from us, that's the business that I look after, servicing that audience. And I've also run our sustainable finance business for the last 2 years, which includes all our ESG data, which has, of course, become incredibly in demand, both into thematic investing around ESG, but also in terms of thinking about business models and how sustainable they are. So we can come back to that, I'm sure, but that's me.
Yeah, we've been talking about ESG all day, and we'll focus on it today as well. Ido?
Yeah, so as Tal said, Ido Shomrony. I'm a partner at Shibolet law firm. I'm a member of the high-tech practice. I'm heading the FinTech team. We accompany startups, financial institutions, investors, accelerators, basically with all their needs, corporate, commercial, regulations, M&A, IPOs. That's pretty much in a nutshell who I am and what we do.
Perfect. And Jonas, let's try your mic now. No. Can you try without the headpiece? Without the, without that? And disconnect it from your computer?
We did hear him before, so...
You did hear him?
Yeah. Backstage.
Jonas, try maybe to log out and back in, and plug out the earpiece, the earpiece. Yeah, okay. So hopefully Jonas will join us in a second, but we'll start with our first topic for our panelists, and I want to touch on the increase of fintech mega rounds. You know, we talked about Shibolet and what's going on, and investment mega rounds in general. So would love to hear your insights on how do you see the market? What do you feel that the market is going for with this huge investment? You know, both in sizes, in volume, and in valuation, which is, you know, can be dramatic. Some people talking about a bubble, maybe not. Would love to hear your take on that.
Yeah, so maybe I can start as a growth investor, and I am looking at a lot of investments across the different sectors. And I think it's a general theme, right, that rounds are becoming much larger. So you're speaking about those mega rounds. There is a lot of capital in the market, and you have the tendency for companies to become much larger. So I'm based here in Israel. In Israel, years ago, you were used to see companies sold for technology. And today you see companies that are staying private longer and are building these companies to a very large extent. So more money is going in there. More money is being raised in the single round just because there is also a lot of capital flowing into the technology markets. And fintech coming out of COVID-19 is definitely a market that is being seen more as the next major platform, technology platform, alongside this cloud, what was mobile, etc. And this is, a key theme that investors are looking to invest in right now. And I think it's a very special and interesting momentum, and you will see this going forward. This kind of what you call mega rounds in those companies. I'm not relating to bubble or no bubble. I'm just saying, this is the kind of norm for coming out of the pandemic.
Okay.
Time will tell.
Yeah,
Jonas?
time will tell. I agree.
Let's hear you shout.
Let's see if this works.
Yes.
Now. Okay. Wow.
Perfect.
It's not a conference if no technical difficulties, right?
Not at least 10 of them.
Yeah. So my name is Jonas. I'm a senior associate over at CommerzVentures. We're a fintech specialist fund. We only invest into fintech. We do that throughout Europe, the US, and Israel. And we are an early stage investor. So we invest from the Series A onwards, whatever that means these days. Probably what used to be an A round is now rather, is a B round. So we're also getting earlier and earlier because the pressure is coming from the top down. We are investors in Israel, as I said before, and local companies include eToro, where we invested back in 2015, Curve, which was recently acquired by PayPal, Open Legacy, which are also here today, and Payke, for example. Yeah, and excited it's all working out now.
Okay, wonderful. So maybe you can join and relate to Irit's notion about the mega rounds, about how do you see that from a CommerzVentures point of view?
The thing is, everything changed so quickly. It's been, I'd say, a year of complete change in the market we see, especially in Europe. The US funds are coming in. They're raising significant amounts of money. Tiger is just insane, investing twice per week in a late stage company in Europe. They pay very, very high valuations, so it becomes very competitive on that end. So if you're a growth investor within Europe and you don't have $1 billion to invest, it's a tough market. So what you do is you go down, right? You go to the B rounds, you go to the A rounds. You even see Tiger becoming active in these rounds as well. And there's so much capital on the market that people are they just have pressure to invest. They have pressure to deploy. This is one factor. The other, obviously, is that we've seen large outcomes. So companies are going IPO at significant valuations. We see that you can get the decacorns within fintech. You have these huge willingness from the public market to pay very high prices. So people are encouraged to spend more, get into the companies before an IPO, and then still achieve significant outcomes later on. And since that is possible, and even more so possible now than it was a year ago, I think the pressure is on to keep coming.
Leon, or Irit, please.
I just want to add, so it sounds like the market is completely insane, but what actually also happened, and we must admit, is technology has been an enabler. We saw that for the past year, right? Money has been flowing kind of to the tech market, away from the more traditional sectors. And I think this is a theme that even though the world is coming back, or at least here in Israel, things are coming back to normal, technology will still be kind of a very important driver. And there will be still a lot of money going into that sector. So there will be a redistribution, I think, and it will calm down a little bit. But I think there is still, like, going forward years, a point to make that there are technology companies, and that's why, for example, a Tiger is doubling down on this market. So there are a lot of reasons for the current behavior in the market.
Absolutely. Okay. But if I may, there's also so many companies going IPO and doing a SPAC right now are not ready to be in that position. And some of them haven't shown that they can become good businesses. Coinbase is an absolute monster of a company, right? eToro going live by SPAC is also ready for that because they've proven they can really make money for investors, profitable companies and growing strongly. But others have not shown that yet. And I think there's also a lot of fantasy still in these prices.
Yeah, there are. Ido, where do you see that maybe in your firm with different investments and M&A processes that you're undertaking?
if we speak about what happens in our court, then that would be experience relating more to the Israeli arena of fintech. I'm putting the Coinbase for a second aside, and what we see, I think we can learn trends from it and draw some more general conclusions. I can think of few examples that we've done just lately. One was T-Prank's company, which is
huge,
familiar in Israel.
Yeah, phenomenal investment.
Yeah, exactly. What they do, just for the ones who don't know them, they basically gather tips from analysts about stocks and grade those analysts based on the success rates of the recommendations.
Yeah.
And they recently raised 77 million from Tritech. It's an investor that we represent. By the way, we also represent T-Pranks itself on other matters. And 77 million in terms of the Israeli arena, it's quite a lot. And I'll give two more examples, I think, and then I can wrap it up to a conclusion, at least of mine, about what happens here in Israel. The other is Ernix, also represented by our firm, became a unicorn. What they do is pricing personalization, basically, and for banks, for insurers, but they also do other stuff now.
Yeah.
And Blue Dot, which was used to be called Vadbox, represented by a partner of mine as well. And this is basically tax returns for corporations.
So both in the local, and the global arena, we have tremendous investment rounds. Sorry, Ido, you want to say something else?
What I'm trying to see is what is the common denominator for these companies. I mean, they come from different angles. Some of them are B2B, some of them are B2C, some are trading, some are back office, RegTech. But there is a common denominator if you look at what happens here in Israel. And I think that companies matured. We have enough companies which are not young and early stage anymore, and they look to play in the playground of the big guys. I mean, and for that you need significant funds, whether it's for marketing, for sales, for R&D, to keep improving, inventing, remain on top of things. And for me, again, it shows signals of maturity for the Israeli market, and we'll see more growth investments as we move further.
Yeah. This is actually relates well to what Jonas and Irit said about the differences between, like, what is the hype and which are the really strong companies. Leon, you know, we talked a little bit about T-Pranks, which I know you're working with, but you have a very particular point of view on the market, being really assessing and harvesting all the data. How do you see that, the mega round phenomena?
Yeah, so look, I guess I would, I think we're starting to tease out in this conversation a little bit of the dynamics that are important here. There clearly is a shift over the course of the pandemic and the lockdown to digitization, and that is a trend which is clearly very, very, of which we're all trying to ride the wave, or which a lot of the fintech players are trying to ride the wave, right? How much of that is going to change for good versus how much of that is a short-term change, which we will come out of as we come out of the pandemic, still remains to be seen to a certain degree. There's still uncertainties around that. And the danger, of course, about assuming that everyone can ride the wave is that you become less and less focused on picking those companies, as you rightly say, Tal, around, those companies that have got a really robust business model, really strong sort of go-to-market strategies, and have the ability to actually really generate commercial value in the long run. And that in some sense, that needs to come out in the wash. There's no guarantee that everyone that raises a lot of money can figure out how to execute it well. I'm not suggesting that there's a bust there. I guess I'm suggesting that what we've seen historically is, don't assume that because you can be part of a mega trend that everyone on that mega trend is going to do as well as everyone else. And I suspect that that's probably the challenge that my peers on this panel are kind of working through, how you actually pick those ones which are set to really ride the wave versus the ones which are going to kind of crash and burn on the journey.
We kind of talked about ESG earlier today, and we saw that companies that have implemented ESG methodologies or focused on that particular avenue have actually been more successful in terms of how they deal with the COVID situation. And in my point of view, it's really related to the transparency that it provides to investors. But
I think,
yeah.
Sorry, I was just going to say, look, I think there are two fundamental reasons for that. The first is to do with transparency, and ESG is often about, you know, what data that you make available to your investors and the wider community associated to your ESG footprint, if you like, your own carbon emissions and your own policies around diversity, inclusion, and, you know, all those kinds of things, all of which is important, of course. And of course, there is greater and greater demand for that information as well. And of course, there is good correlation between, you know, some ESG metrics, things like levels of diversity and inclusion at the board and at the senior management level, long-term outperformance, right? So there are those things, but there's a whole other flip side to this, which is what I describe as the ESG business model. The reality is that the economy will decarbonize aggressively over the course of the next 10 years. And if you haven't got a business model which is aligned to that decarbonization agenda, aligned to something like the Paris Agreement, then the threat here is that you will find yourself a little bit more like Blockbuster Video than Netflix. And as an investor, you'll find yourself invested in a little bit more in a Blockbuster type video than in a Netflix, right? And that's the other critical reason why ESG is important. It's not just about transparency and about sort of the data that you're tracking and showing off and showing you're a good corporate citizen and so on and so forth. Those are good things, and I'm not undermining it. But there's also another element here, which is, have you recognized that sustainability and sustainability issues are an intrinsic part of your business model, and you understand that you're on a journey there, and it needs to track with the journey that the economy is going through. I'd love to hear what my peers on the panel think about that as they think about investment.
Just before next step, I'm going to ask our audience if you're utilizing or expected to utilize ESG protocols or focus on that, or is this a new thing for you? So I'm sending a vote, and we'll see what people will answer, and we'll be able to benefit from that. But Jonas, I know you're also very focused on ESG investment. You actually have tell us actually about the strategy that you have in that.
Of course. So as investors, we always look for themes that have some sort of tailwind. We saw that, for example, with the institutionalization of crypto that happened 2019, 2020. We saw that with finance becoming, as you said earlier, finance becoming a layer in a wider product. So embedding finance into all kinds of products, there's a huge tailwind. And another, probably the most essential and most substantial we see currently is decarbonization of the economy, as you said, Ethan. And we firmly believe in it because, if we do it within the 9 years, it's good. If we don't do it, the world is basically going to shit, right? So we need to act on it. And I'm very happy to see that within the early stage investment scene, everybody's formulating a thesis on it. Everybody's looking at it. Everybody's excited by it because it sounds a bit stupid, but you're actually, with these investments, making the world a better place, right? It's really exciting to invest into fintech, but at the same time, helping, with tangible products to decarbonize the economy. It's just a fun thing to invest into, and it makes you really good. It gives you a good feeling. And also, since there is such a significant tailwind in this thesis, we firmly believe that huge companies are being built that make it accessible for companies, for example, to, first of all, the basic, measure how much CO2 are you producing.
Yeah.
The company is measuring it from the mine to the final product. You can finally see, okay, what is the footprint of my iPhone really? Make it measurable, make it, put a price on it. So you can also price it, and then you can help in offsetting what you've done as a.
I don't know if as panelists you see the results, but we have 67% going towards most of the people aren't really focused or don't understand how to utilize ESG, which is actually now it's grown to 70. So we're not at a good place in terms of the general population or wide understanding of ESG. And I think we need to be better communicate this entire faction, because it is something that we see investors, like Irit and Jonas are focusing on that. We see a lot of companies that have this under their agenda, and we see tremendous trends of companies focusing on ESG moving forward. So it is kind of surprising, but we'll see how this evolves. But we're talking about ESG for on one hand, but investment isn't I'd say skimmed down just to ESG. So let's put that aside for a minute, and I want to hear your take on what do you think investors will look in terms of trends in the future. I know Irit, for example, everything in terms of embedded finance is something that is super interesting and highly discussed. So how do you see that from your firm point of view?
Yeah, absolutely. So, I think the terms here have been flipped already in our discussions. We see a big shift towards digitization across kind of different stacks, right? So if you look at FinTech, the tech products that we're looking at, almost every company is becoming a FinTech company because they're adding financial products to their technology.
Yeah.
Which makes a lot of sense, right? We as investors also, I mentioned in the beginning, enterprise software, we're looking for AI-enabled services. We're looking for automation, for personalization. Somebody mentioned here before personalized products. These are all super important. With that, also kind of making really FinTech a platform and an enabler for any kind of verticals. And that's what we're believing in.
I want to add a word to what Irit just said, and I totally agree. I think we are mentioning disruption a lot. And for me, disruption is the revolution, and there is still a lot of room for evolution. Meaning that there is a lot of room for traditional financial services companies to simply improve their services and become digital. And if we spoke about COVID, which increased tremendously the digital, the use of digital, and whether it's in banks and whether everywhere, and accelerated processes that otherwise would take years, I think we'll see that more and more. And actually, I feel that. I mean, I see startups that found it hard to get attention, for example, from banks in order to get a pilot before COVID. And now sometimes positions will change. Banks are running after them in order to get a pilot. So I think
that's an interesting turnaround. Yeah. Leon, where do you see, like in your unique positioning, what do you see? What do you believe will be some of the investment trends that we'll see investors aiming their money towards?
So look, we are ourselves a fintech provider, although we're not on the small end of that scale. We're on the very large end of that scale, very mature end of that scale. But we work with a lot of smaller fintechs as partners and certainly, as providers to them. And certainly, the use of AI I still think is actually relatively still immature in the market. There's still a lot more to be done there to understand what AI can do and apply it to specific use cases, particularly fintech use cases, and really make it useful at identifying some and correlations to performance and things like that. I think there's a really important role, by the way, to bring up the whole ESG issue. There's a lot associated with ESG, which fintech and AI can play a really important role in. Making sense of externalities, satellite imagery and things like that, deforestation and emissions, and indeed thinking about the impacts of the products and services of companies. ESG data is mainly about the operations of companies, but the products and services of companies are equally important. And I've come across a few really interesting fintech players that are trying to make sense of, well, how do we judge in an objective way what the impact of the products and services are on ESG criteria of any given company. And so lots and lots of innovation and room for growth in that space. But the trick is, of course, always, what problem are you solving for? What is the use case you're solving for, and how can you take it to market? And so there's going to be a lot that comes out in the wash. But I think that, those are some of the kind of themes that I see.
Gentlemen, lady, thank you very much for this panel. Any last note or remark you want to add? This is a good time for that. But other than that, I think we don't have enough days in the week to talk about the investment trends and where is it all going. So we try to scrap the surface and point out some of the more interesting avenues that we see. But I hope to see you all in next year and see whether or not we're aiming, or we'll have another panel saying, is ESG gone for good? So let's see how things evolve. So, sorry. Thank you very much, Irit, Leon, Ido, Jonas. It was a pleasure hosting you, and looking forward to seeing you very soon.